Well, in a deal worth nearly 32,000 crore rupees, Hindustan Unilever has decided to merge with GSK's consumer healthcare business in India. The country's top-selling malted milk drink Horlicks will now be added to HUL's portfolio along with brands like Boost, Maltova and Viva. But that's not all. HUL will also add brands like crore, Eno and Sensodyne to its kitty. So what do we make of this coming together of two mega entities? Joining us now to discuss the potential of this partnership are Sunil Alag, founder and chairman of SK Advisors, Milind Sarvate, founder and CEO of Increate Value Advisors, Vishal Gutka, AVP Consumer and Media, Phillip Capital, and tax expert Girish Panwari. Gentlemen, appreciate you joining us here on the show. But before we move any further, let's go across to our colleagues Nisha Podar and Mangala Malu. Nisha, you broke the story first, so let me come to you. Take us to the final contours of the deal.
Thanks for that, Shireen. It's a hotly contested battle to really get the big Horlicks boost, which HUL has won against another multinational, Nestle. Now, the big boy, Unilever, gave the final push really to clinch this particular deal against an all-cash offer, which was presented by Nestle. Now, HUL has put forth its richly valued share in a share swap transaction and gave a higher valuation than its closest competitor, and the owner of Horlicks, GSK Consumer Healthcare, is sold for 31,700 crore rupees. Now, GSK will get 5.7% stake in HUL post the merger is complete, and GSK shareholders will get 4.39 HUL shares for every share held in GSK Consumer Healthcare. Now, not just that, there is a cash component. Unilever will also give cash amount of £566 million or $720 million for Horlicks brand, which will be bought overseas, as well as Bangladesh unit and the overseas businesses of both Horlicks as well as Boost. So as part of the deal, HUL will also use its strong distribution network to sell GSK's over-the-counter products for 5 years. So that got GSK Pharma stock also soaring in last minutes of trade today. It's a large global deal worth over $5 billion to be completed in a year's time and needs approval from the regulators, NCLT, as well as the shareholders. Here out the management of the two companies, Sanjeev Mehta, as well as the GSK strategy head, on the synergistic benefits and what it brings to the table for both the parties.
With special focus on rural markets and emerging channels, and expand our offerings to the fast-growing premium segment. There will also be focus on looking at future-ready formats in line with consumer trends. Our direct coverage is at 3x GSK, and our tech-led capabilities will be a growth multiplier. On the cost side, we see significant benefits across the value chain, and the transactions will be margins and EPS accretive to HUL. Our F&R business post the proposed merger will cross the 10,000 crore mark, making us one of the largest players in the country in the F&R space. We expect the transaction to be completed by December 2019, subject to necessary regulatory approval.
This is a great deal for GSK PLC shareholders, but also importantly GSK Consumer Healthcare shareholders here in India who are getting a premium. And also Unilever, and Hindustan Unilever is a fantastic company. Clearly here in India they have a very famous heritage and fantastic distribution capabilities. So we're delighted, having owned these brands for over almost 100 years, to divest them to Unilever and Hindustan Unilever, and we hope they can take them forward for the next 100 years.
Well, managements of HUL and GSK on the rationale behind that deal. Let's go across to Mangala Malu. Now, Mangala, let me come to you to explain to us how this deal is going to benefit HUL's business specifically.
Well, Hindustan Unilever taking a sip of Horlicks is definitely advantage HUL. Why is that? Because for a value of 31,700 crores, you're getting more than half of India's malted food drinks market. HUL and Boost together own about 50% plus in India's market, in India's MFD market. Now, what does HUL pay for this? 8% equity is diluted for 12% growth in their top line and 15.5% growth in their bottom line. So for a 15% growth in earnings, HUL HUL dilutes its shareholding to the tune of just about 8%. But talk about the synergies. HUL's distribution might would take Horlicks to the farthest regions in our country. Remember, GSK's current penetration in the rural areas is just 14%, and this compares with 24% of their overall penetration. And Hindustan Unilever's rural reach is more than 40 times GSK Consumer's rural reach. That is benefit number one. Secondly, Hindustan Unilever can also take advantage of the cost cutting that will come by, or improvement in the company's EBITDA. Horlicks is a high gross margin product, and it does not enjoy that many EBITDA margins. Hindustan Unilever says that they can go ahead and improve the EBITDA margins by about 800 to 1,000 basis points. If that happens and a 10% revenue growth happens, as the company is saying, the deal looks even more attractive if you look at it from an FY20 perspective. And finally, 8 out of 10 Horlicks sachets are sold in the south and the eastern part of the country. Hindustan Unilever wants to tap into the other markets as well and grow the brand out there. Clearly advantage Hindustan Unilever, and the stock rallied to a record high today.
Okay, Mangalam, thanks very much. What was that tagline? Boost is the secret to my energy. Well, HUL might be singing that tune soon. Sunil Alagh, founder and chairman of SK Advisors. Milind Sarvate, founder and CEO of Increate Value Advisors. And Girish Vanvari here with us. Gentlemen, appreciate you joining us. Milind, let me start by asking you about what you make of this particular transaction, a $5 billion deal. And while the focus really is on Horlicks, it goes much beyond that for HUL. And combine the power of GSK's brands with HUL's distribution muscle. This does seem to be a match made in heaven, isn't it?
Yes, it's a good win-win deal for both HUL and GSK, simply because the reasons for these decisions from the both sides are different. GSK is doing it more for reorganizing their global strategic portfolio, whereas HUL is doing it to add to its Indian presence and build complementarity into its health portfolio. As was mentioned, HUL's food portfolio was just about 18% of its total turnover. With this, it crosses 25%. So it gives that much more muscle. As Sanjeev Mehta also mentioned, that overall turnover crosses 10,000 crores. So for it to invest significantly in the food and refreshments category, this is a very good development. It gives a critical mass. I don't make too much of the pharma distribution, because the OTC brands which are going to be distributed by HUL, they are much smaller and they are specific problem solution brands. I don't think HUL has that kind of a therapeutic design in the pharma space. So that distribution is something which is a part of the deal, not the real driver. I'm just a little intrigued by the fact that the distribution arrangement is for 5 years. So GSK Pharma will not build its own distribution. That seems to be clear from this deal.
Yes, valid points that you make. Let me go across to Sunil Alagh. Sunil, as Milind was pointing out, and what we heard there from Sanjeev Mehta as well, that the key driver really seems to be the big bet and the big play as far as the food and refreshment side of the business is concerned. This will now take them beyond the 10,000 crore rupee mark, as Sanjeev pointed out. And as Mangalam was alluding to, both EPS accretive, adds about 15.5% to the company's profitability straight away.
Yeah, from my point of view, as somebody was saying, look at from the GSK point of view, Horlicks only sold in India, Bangladesh and Malaysia. I mean, almost 80 or 85% was in India and the balance was 10 or 15%. It was obviously not fitting into their overall strategy, and for them to sell out, perfect, because that's where they want to go. As far as levers is concerned, I don't think the rural distribution might is going to help the sale of Horlicks as much, because look, Horlicks is an expensive product. They haven't come out with anything as yet which is inexpensive and which the rural market can buy. But they will definitely improve their profitability, because Horlicks is in a market where it literally has no competition. I mean, it's the price leader, it's the brand leader, it's the product leader, and they get all this. And fundamentally, remember that Horlicks has only been in the East and West. Almost, again, 80% of their sales, if I'm not mistaken, has been in the East and South, sorry. So West and North is where levers will gain if they are able to launch variants, if they are able to get into areas which Horlicks has not got into as yet. And don't forget, everybody is not mentioning the word biscuits, and it comes straight away to me. Horlicks biscuits is one of what I would call the silver lining, which is just lying untapped, and Levers gets an entry into the biscuit market as well with Horlicks. So it's a big opportunity for Levers to improve the top line and to launch variants where the rural market can then take advantage, not straight away.
Right.
You know, you're right about that, and that question, so just one second, Nisha, that question was put to the management, and they said that they cannot comment on brand extensions just yet, but I would imagine what you're pointing out, Sunil, is the way forward. But very quickly, Milind, if I could come to you on the point that Sunil raised as well, because Srinivas Phatak, the Executive Director Finance at HUL, on this issue of how do you actually broaden penetration and take Horlicks deeper into the rural markets, seems to be suggesting that the focus will be on market development. We need to drive penetration. Affordable packs can be a strong driver. So that clearly seems to be part of the strategy to address the concern that was raised there by Sunil.
I feel that we cannot rely totally on distribution to ensure that a brand does well. There is a lot of role which marketing plays, and I think the malted health drink category is nearing exhaustion, and it needs to be brought into some different light. I feel HUL would do well to focus more on marketing. I don't believe that just by distributing a brand can be propped up. So it needs some strong marketing plank, some differentiation, some rejuvenation, and I'm sure HUL will be focusing on that also. What they mean by market development is not only widening the reach, but also doing something different to the brand. And as Sunil rightly said, the biscuits under the same brand as Horlicks could also be a tool to build greater equities with this brand.
Right. So many synergistic benefits and brand extension can be done. But let me get in now Vishal Gutka into the discussion. All right, we'll get Vishal later. But coming to Girish then, what is in it for the minority shareholders, Girish? Because brand is sold separately here. And also the taxability angle if the brand is sold overseas while 80% of the business in Horlicks is here in India.
Absolutely. So this is going to test the tax office in 3-4 aspects. The first aspect is adequacy of consideration. So there's a split between the merger value and there's a split between the arrangements which are getting sold overseas. So when things are getting sold overseas, will there be a tax issue in India? Will it be taxed as royalty or technical know-how fees? Will there be GST on it? Because there's a GST element also, like if this brand is built in India and the sales are in India, where international transaction happens, will it suffer taxation in India? So that's the first aspect the tax office would like to be convinced. What is the taxability of the amounts which are paid overseas? What is the adequacy of the split between 32,000 crores and the respective amounts being paid overseas? The second aspect is, on the first reading of it, is the merger is tax-free. Because when you merge, a shareholder of GSK Consumer will be given shares in this merged entity. The merger is tax-free, assets are transferred, so on and so forth. It's not been told when will that 5.7% be sold and to whom will it be sold. When that sale happens, that's when the tax trigger will happen for India.
All right, so there is no option. HUL has said that there is no downside protection as far as sale of the HUL shares is concerned for GSK. For the minority shareholders, how will LTCG really work out in this particular case? Because on 31st of January, the share price was around 6,800. The deal is getting done at over 7,000 rupees per share.
So I think I'll touch both the points. First is when GSK is holding shares through Singapore and UK. When the sale happens from UK, anyway they'll have to pay tax at the rate of 10%. They were entitled to treaty benefit. In the merger, they'll be getting shares in Hindustan Unilever's. The question is whether treaty benefit be grandfathered. The plain reading of it says no. So will that be bought under the tax net? Also will be a big question mark. As far as minority shareholder is concerned, today the law is that if you were grandfathering shares, 6,800 is the price as on 31st January 2018, and if you sold it today, which is 7,500, on 700 you have to pay 10% tax. That's the law today. Assuming these shares get converted into Unilever shares, because 4.39, as you said.
They're not sold, they are merged.
They are merged and I get 4.39 Unilever shares. So effectively, I will sell Unilever shares. And there are 3 views in this. First is, do I take the price of Unilever shares as on 31st January? Should I take the price of GSK Consumer shares as on 31st January? Or the worst case, no price is available to me. The technical interpretation is a vexed issue.
Right.
And the interpretation could also be that zero could be, you can't take a grandfathering as on 31st January.
Right.
So minority shareholders have to really be aware of this whole transaction as to what it means to them.
All right. So Girish is adding that, Shireen. So the two important points that the minority shareholders will really watch out for. First, the brand is sold separately overseas and we don't know the exact price at which it is done. And that benefit has really not come to the minority shareholders, but it was already owned by the overseas entity. And the second bit is going to be on, there is no clarity on the LTCG if these shares are merged with HUL and later on they want to sell it. So these will be important points, but also, Shireen, there is a special resolution, 76%, 75% of the votes are really required from both the companies, and both the promoters are really comfortable in the shareholding aspect.
Absolutely. So those will be the tax-related issues that will have to be dealt with by both parties. Deal closure expected only end of 2019. But let me go back across to Sunil Alag. Sunil, you know, obviously the integration process will start as this deal starts to be put together. But what would be the key priorities that HUL should focus on as it starts to get this on the road? Okay, we'll get to Sunil in just a second. Milind, if you heard my question, what do you believe will be the key priorities for HUL now as it moves forward? Okay. Sorry, go ahead. Go ahead, Sunil.
Yeah, I think what they will... Yeah, as I said, I missed the last part of your question, but fundamentally, if I'm in the company right now, Horlicks is one area which has got nothing to do with what Levers has been doing so far. So it's a great opportunity for how do you now leverage the brand and what are the possible brands that can be brought out under that same name, because that is the critical part which Levers will have to look at. And invariably, look, when somebody was talking about shareholder value and everything else, food business in India, you can never go wrong. And don't look at it in a one-year point of view, whether the minority shareholder is going to lose or not. Over a period of 2 to 3 years, I don't have any doubts in my mind that holding on to your shares, you'll make a lot. But how do you now leverage Horlicks? You bought it. Most people would say, I would say, leave that company alone. Don't try and fiddle around with the management too much. Just get new ideas thrown into the way to put Horlicks into the market now. And don't leave it with just malted foods, because the opportunity and the image of Horlicks is such that you can really pounce on that potential now and launch a whole host of brands in the next couple of years to take advantage of the growth. That's what I would do in any case.
All right, Milind, I'll give you the final say on the program. Don't worry too much about what happens in year 1 or year 2. This is going to be a long-term play for HUL and a long-term bet for the company. What would the priorities be according to you?
I agree with Sunil that the focus would be on leveraging the strength which is Horlicks. And I think the other big point would be that the categorization into malted health drinks is, so to say, a man-made classification. It is not consumer-made classification. So one would expect HUL to broad-base that platform into health drinks similar to the ones which Abbott has, or even something which Danone has in Proteinex. So they would try to widen that portfolio. They are very well equipped from the marketing standpoint, from the distribution standpoint. And I feel that continued distribution of the smaller OTC brands will also give them some foray into the chemist network, which I feel would benefit the overall mix. I feel this deal has been extremely sweet for HUL. And it has also been sweet for GSK because remember that they took this decision sometime in March, and since March the price has had some run-up, so they have made their money in the run-up also. So I feel it's a great win-win transaction, and coming on top of the other deal which Cadila had done, I think there is a lot of churn in this category which is good for the development of the foods sector.
Okay, so win-win for both HUL as well as GSK. In fact, this is a story that broke right here on CNBC TV 18. Nisha had broken it. And just to pick up on the last point that Milind Sarvate made, and this is what Mangala Malu had written on our website, cnbctv18.com, echoing exactly what Milind is saying. There is a huge opportunity for Unilever to roll out a host of protein-based, low-carb, no-sugar, life-altering elixirs and whatnot. Well, gentlemen, appreciate you joining us here. Girish, Sunil, Alag, Milind Sarvate and Nisha, thanks very much for being here.